Microsoft hits $4 trillion. AI cloud power record earnings. Microsoft has achieved a remarkable milestone, soaring to a staggering $4 trillion in market capitalization during after-hours trading, thanks to an exceptional earnings report that highlights the company's robust performance. The tech giant wrapped up its fiscal year 2025 with impressive results, driven by an unprecedented demand for cloud computing and artificial intelligence AI services. For the quarter ending June 30th, 2025, Microsoft announced a revenue of $76.4 billion, marking an impressive 18% increase compared to the previous year. Furthermore, net income surged by 24%, reaching $27.2 billion, while earnings per share hit $3.65, surpassing analysts' expectations of $3.37. In our largest quarter of the year, stated CEO Satya Nadella during the earnings call, we significantly exceeded expectations. The positive results prompted a strong reaction from investors, with Microsoft's stock price jumping over 7% in after-hours trading. This surge propelled the company's market value past the $4 trillion threshold, making it one of only two companies globally to achieve this feat, alongside NVIDIA. This response from the market underscores Wall Street's confidence in Microsoft's strategic direction, particularly its aggressive investments in cloud infrastructure and its efforts to commercialize AI tools like Copilot across its productivity and development platforms. Nadella emphasized the transformative power of cloud and AI in the earnings press release, stating, "Cloud and AI is the driving force of business transformation across every industry and sector. We're innovating across the tech stack to help customers adapt and grow in this new era." During the earnings call, one analyst expressed astonishment at the scale of Microsoft's results, remarking, "Satya, back to the strength across the board in the quarter. It's just the magnitude of upside that has shocked many here." A significant contributor to this success was the Intelligent Cloud segment, which includes Azure, generating $29.9 billion in revenue, a robust 26% increase. Revenue from Azure and other cloud services skyrocketed by 39% for the quarter, with annual Azure revenue exceeding $75 billion, reflecting a 34% year-over-year growth. Nadella pointed out that major enterprise clients are now leveraging both traditional and AI-driven workloads on Azure, indicating a shift from mere experimentation to rapid deployment of AI at scale. Nadella asserted during the analyst call that Microsoft continues to lead the AI infrastructure wave, gaining market share each quarter this year. He highlighted that Microsoft operates more data centers than any other cloud provider, with new facilities established across 6 continents, totaling over 400 data centers in 70 regions. The company also saw strong performance across other segments. The Productivity and Business Processes division, which includes Microsoft 365 and LinkedIn, generated $33.1 billion, reflecting a 16% increase. The More Personal Computing segment brought in $13.5 billion, up 9%, supported by a resurgence in device demand and increased revenue from Xbox content. Over the entire fiscal year 2025, Microsoft reported total revenue of $281.7 billion, a 15% increase, and net income of $101.8 billion, up 16%. Additionally, the company returned $9.4 billion to shareholders in the fourth quarter through dividends and stock buybacks. CFO Amy Hood highlighted Microsoft's operational discipline and the scaling of AI investments, revealing during the earnings call that the company anticipates over $30 billion in capital expenditures for the first quarter of 2026, driven by the strong demand signals they are observing. When questioned about the return on investment from this substantial spending, Hood noted that Microsoft has a contracted backlog of $368 billion across the entire Microsoft cloud, not limited to Azure. She expressed confidence that this expenditure is directly linked to business already contracted and on the books, emphasizing the necessity to deliver on these commitments. Hood also reassured employees and investors about the company's forward momentum, stating in an internal memo following the earnings report that FY26 will require intensity, clarity, and bold execution, reflecting the opportunities and competitive pressures that lie ahead as Microsoft intensifies its focus on AI and security priorities. In a fascinating twist, this story was initially drafted with the assistance of generative AI, and an editor meticulously verified the accuracy of the information before publication. As we look ahead, the 2025 Fortune 500 list is set to unveil the definitive ranking of the largest companies in America. Stay tuned to explore this year's list. Microsoft stock soars. Azure Cloud business drives growth. Microsoft stock soars, fueled by Azure Cloud innovations. Microsoft, MSFT, recently released its latest fiscal results, and the figures are nothing short of impressive, sending its stock soaring in after-hours trading. The company surpassed Wall Street's predictions for its fourth financial quarter, primarily due to its flourishing cloud computing and artificial intelligence divisions, for the quarter that ended on June 30th. Microsoft reported earnings of $3.65 per share, alongside a remarkable revenue of $76.44 billion. Analysts had projected earnings of $3.37 per share, with sales of about $73.86 billion, showcasing a robust performance. Year over year, Microsoft experienced a 24% increase in earnings and an 18% rise in revenues. In the June quarter, the income from Microsoft's cloud segment surged by 27%, achieving $46.7 billion. What's particularly fascinating is that revenue from the Azure Cloud platform escalated by 39% year-on-year for fiscal Q4, significantly outperforming the anticipated growth range of 34% to 35%. This illustrates Azure's increasing significance within the tech industry. But here's where it gets controversial. Can any competitor catch up with Azure's rapid growth, or is it too far ahead? Cloud and AI, the future of business progress. According to Microsoft CEO Satya Nadella, the combination of cloud and AI is fundamentally transforming businesses across all industries. This highlights how critical these technologies have become. Microsoft is not just making incremental changes. It's innovating across the entire tech stack to assist its customers in thriving in a rapidly evolving environment. Additionally, Azure has crossed the remarkable milestone of $75 billion in revenue, reporting a 34% increase, fueled by advancements across all service workloads. In particular, Microsoft's Intelligent Cloud unit saw its revenues climb by 26%, reaching $29.9 billion in fiscal Q4. Furthermore, the Productivity and Business Processes segment enjoyed a 16% growth, totaling $33.1 billion, while the More Personal Computing division increased by 9%, generating $13.5 billion in sales. Looking forward, Microsoft provided optimistic guidance for the upcoming September quarter, anticipating revenues of $75.25 billion, surpassing the consensus estimate of $74.15 billion. This forecast suggests a year-over-year increase of approximately 14.7%. Notably, Microsoft also projects Azure's growth to hit 37% in constant currency during the fiscal first quarter, indicating sustained momentum in its cloud operations. In after-hours trading today, Microsoft stock surged over 8%, reaching $557.60. It's important to note that during regular trading, its stock only saw a minor increase, closing at $513.24. Just recently, on July 25th, Microsoft set a new regular session record, peaking at $518.29. Microsoft is currently featured on two prominent IBD listings, long-term leaders and tech leaders, signifying its strong position in the market and its potential for sustained success. Would you agree that Microsoft is setting the standard in cloud technology? Or do you think other players might give it a run for its money? Join the discussion in the comments below.